Right. So we have what you call an order block, right? We have what you call an order block, right? Um, don't worry about the other T here. Okay. So what is an order block? An order block is a last buy before you sell candle or your last sell before you buy candle. And what does it mean? What it means is if you see on this if you see on this chart over here, what we have is we're in a downtrend, right? But before we moved up, what we see is we have our last buy, and let me show you the last buy that I mean. We have our last sale, sorry, we have our last sale before we started buying candle, which I just marked there. So what I can do is I can zoom in so that others may actually see of what you're talking about, right? So this is our last sale before we buy. And as we have that last sale before you buy, what do you see? You see that the market goes up. When it retraces, we have another last sale before we buy again. As we can see, it's this one, right? And then as we go and move with the trend, we have another last sale before we buy as well. So these areas I'm marking are now what we call order blocks. You see that we all have these last sales before we started buying. Here we have another last sale as well before we bought. Right. So these are what we call order blocks. Right. And as you can see, I've marked my last sale before I started buying in my 24-hour. But you can see that if I go to my 2-hour time frame, and that whole area where I marked my last sale before I started buying, I'm gonna see that I have more order blocks, right? So which one now is your last sale before you started buying? In you can see that it's here, right? We have this last sale before we bought, but previously it was this whole area over here in our 24-hour time frame. Now, what does it mean? It means that we can see order blocks in bigger time frames and we can see order blocks in smaller time frames. Now we have our last sale. Now we have a last buy before we sell here. We can see that we have another one here, right? So what you see is if we're in an uptrend, we have last sell before you buy. If we're in an uptrend, we have last buy before you sell, right? So what is the trick about order blocks? The trick about order blocks is that price is to come at some point, especially if you see at this point with that last buy before you saw DA. If we drag it, what do you see? Price came at some point and then tapped on it and then reacted and fell, right? Just as much as you can see on this last sale before we started buying, if we mark it over here, what do you see? If we drag, you can see that price. Let me mark it properly, straight to the dot. You can see that price came, tapped on it, and then it started buying. Right. Again, what do we have? You can see that sorry, you can see that this area over here. Again, we have a last sell before we started buying here. I think we will not see it. And what did the market do in the future? It came back to that area, wicked on it, and then it bought. Now, so order blocks, the way that we use them is we use them as entry points, and the most effective entries are the ones that we get at the peak, not in the middle of a trend. And what do I mean by that? What I mean is, let's look for any pair. This one we do it every day. So let's look for any pair that we can look at and attack and actually give as an example to see what we are talking about, right? So let's see, we have our V25S, right? Now, what you see on our V25S is our V25S here, it broke structure, right? And I think we can all agree, according to what we learned that if a trade comes and breaks, right? And then straight away it comes and breaks the previous low. Now this is our breakout structure. After we have a breakout structure, what do we expect? We expect price to come to areas of interest, which are gaps, order blocks, and then sell off. Where was our last buy before we started selling here? Our last buy before we started selling is here. So we mark it. Now, this is what we call an order block, right? And what do we expect? We expect price to come into this OB and then fall. But see, this is a 2 hour time frame. We can scale to M15, right? So that we can have a more precise entry. And now what you can see is instead of us just guessing that this was our last buy before we started selling, which last buy before we started selling gave us a, what can I say, gave us a change of character here. Of course, we already had another change of character, but also remember when we learned about BTMM, what did we say? We have two legs. We have an M here, we have another M here, right? I think now it makes sense. M level 1, level 2, level 3. W, right? Level 1, level 2, level 3, M, and then we fall. I hope but Apple you can basically understand. It was not my intention to talk about this area, but well, it's fine. So what you see is we have our last buy before we started selling here. And what did price do? Price came to that area and then wigged in it and then it fell. Ever since then, I think you can see that it's falling. Why? Because of that simple basic order block. And why did we choose that order block? Because if you see, this is the order block that came and broke structure. Which structure? This structure. Are we understanding? Are we understanding, guys?
Yeah, yes, yes, I'm understanding.
What about others?
Yes, I'm understanding.
What about others? Others is just quiet.
Zvikuzwikwa sei?
Pardon?
Admini zviri kunzwika sei?
Okay. So let's look for another pair. Can we have another? Okay. Now, what I want to tell you is this. We can mitigate an order block and still leave another order block that we need to mitigate. Like in this area, this is an order block. We came and we mitigated it. But if you check, we also have another order block here. I want to show you. We also have another order block here, which which price came to and mitigated. Can we all see it?
Yeah.
Yes,
And then we also again have another order block here, which price left and it came to mitigate it again and then it fell. Can we all agree?
yes.
Yeah.
Right. So someone might think, why didn't price come back again and use this order block and come back again and use this order block and come back again and use this order block? It's because of price exhaustion. There's no more critical orders that will be left here. Plus, if the market was gonna move like that, it was going to take forever. Right. So Now, what you see again is, say, we are in a downtrend. Like what we see, this is a high, right? This is a low, this is a high, this is a low, this is a high. But what you'd see is you also get order blocks at your lows like this. This is an order block, right? This is another order block, right? Here that we see. So let me remove this. But why are we not buying when it comes to this area? Anyone cares to answer? Here is another order block, our last sale before we bought. Why do you think we are not buying at these areas when price comes here? Why are we not buying?
because it is against the trend.
Exactly. So what it generally means is if we get an OB that aligns with the trend, then that's the one that we are going to utilize. Now, it doesn't mean that you see, if we use a fib, let's say here we have a high and a low here, it doesn't necessarily mean we have to utilize an order block that's here at the top. What we say is all order blocks that lie within the 0.618% going upwards are valid order blocks. So let's say in this example, let's see what price did. Right. What you can see is if we have a last buy before we sold over here. If we mark it, price just came, tapped on it. I think we're going to see tapped on the order block. It just tapped on the OB and then it fell. Meaning someone might be like, price is supposed to come and use this order block or use this order block over here. But then at the end of the day, it's 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 not that price yakatorererwa or it's forced to come and utilize this order block or come and utilize this order block over here. Sometimes what generally happens is as long as we have order blocks that are in the valid area, price can just come and utilize them. And in this case, what you can see is we had a gap before, right? And then when this gap was used, this is another trick that you can use. When this gap was used over here, price had no reason to come back upwards. Why? Because if you remember the lesson that I taught you about healthy price action, what you can see is we have healthy price action over here. And to balance that healthy price action, we came and we filled this gap. The moment we filled that gap, what do you see? You see that we came and we left our OB, and then price came, tapped on it, and then it fell. Now, what I want to tell you is this, and I always want you to remember this. Um, People mark order blocks in a way that, let's say, this was our last buy before we sold, right? That was our last buy before we sold. And let's say we want to mark this OB. Let's change color. We want to mark this OB over here. What do we usually do? We come and we do this, right? We come and we do this, right? So what we are basically saying is prices to come back into that area, right? Fill grab orders in this area, leave some, and then go down. So most people they put their stop loss just where the body separates the wick of that OB, and then some mark the wick. But as for me, usually what I like to do, I would like to mark half of this body and then I'm going to project it above, and the same distance that I'm going to have on this half of this body is where I'm going to put my stop loss for my order block. Why? Because sometimes price can come weak onto that. That means if someone had put a stop loss just above or just at the body and the tail separation, he or she is gonna get stopped out. So you need to just give it a little bit of clearance and then let it play. Now, the other thing is order blocks and gaps are different. The way that we enter order blocks is some wait for the 50%. I like to say as soon as price taps, I get into my first entry. When it goes to my 50%, I go into my second entry. And when it's just about to weak here, I get into my third entry. That's my entry criteria for an order block. But if I come now and say just tapped on my OB and then it's now falling, what I would like to do is wait for that candle to close, right? Give me another candle that supports the trend and then I'll add another layer because what you generally see is you can have an OB that can come and play like this. You can have candles that can come and play like this. You can have candle that can come and play like this, right? So they tap on your OB, right? When they tap on your OB, and then next they give you a red candle, right? Which is a sell candle. In this case, we're expecting it to sell, right? So when you get that sell candle, what I expect is I expect to see another sell candle, right? But if I see a buy candle, let's say I've already taken an entry here, but if I see a buy candle now coming, like say, so let me change color. What I'll do is I would just wait. I'll wait until when I would wait until I see, sorry, I would wait until I see two consecutive candles going in my intended direction. So that means if I had my first entry here, my second entry is I'm just gonna edit as soon as the second candle that goes in my direction closes. Where's my TP? It's here. The whole intention of us to trade using order blocks is so that we have a very little, what can I say? A very little stop loss. We don't want our trade to play around a bit. What does it mean? So imagine, say we came and we took this trade over here. Imagine, say we came and we took this trade over here. Um, which one can I reference with? Let's say this one, right? We came and the moment we tapped on our OB, we took this trade. This would have been our entry here, just here at the tip. This would have been our entry. And where would our stop loss be? Our stop loss, if I'm to measure from here to there, it would be somewhere around this area over here, right? And remember, this is 15 minutes time frame. But from that time onwards up to now, I want you to look at something. Just see where your sniper entry is and just see how much it is sold. So you have like little percentage for error. Are we getting it? Are we getting it?
Yes.
Yes.
Right. So,
Yeah, personally, I'm getting it.
so here is another example. We have an order block that's here, but we have healthy price action all over here, right? This is the only point where we can see that we wanted a gap, but there's no gap here. This is all healthy price action. So what it means is there is no need for price to come back to this order block and say, I'm going to utilize this order block. But remember, we are in M15, right? So if you see a healthy price action like this, what you can just simply do is move on to your M5. Say we are now going to our M5. I want to show you something specifically at those areas. So now we've come to M5. And what did price do? What you can see is with this last sell, or last buy before we sold. But this last buy before we sold, I want you to look at it. What did it do? It came and it broke structure here. It broke structure here in our M5. So we mark it, right? So let's mark that last buy before we sold that broke structure. Let's stretch it ahead. The reason why we're doing this is we've already seen that we have healthy price action, right? So if we mark it, what did price do? Just came, wigged it. It never went above the stop loss that we agreed that we put, and it sells. So one of the things that I think I've skipped, I personally like using order blocks that have broken structure, meaning that say we are in an uptrend, right? Meaning we are in an uptrend, right? Um, if we are in an uptrend, what I'm looking for is I don't mind if I have an order block here or here or here, right? What I mind is what did this OB contribute in my price movement? So what you'd see is, let's say now I come and I put my fib. Um, this is the normal way that we do things. Let's now say that I come and put my fib, right? Um, if I put my fib and I mark like this, right? And let's say I see that this OB is just a bit above, right? But it broke structure. I'm not gonna take it. Why? Because it's above my 0.618%. I'm just gonna ignore it. But if this was the one that was below the 0.618% that actually gave me that move that broke structure, that's the one that I'm gonna take. Why? Because the drive, the move, the energy, or the momentum of this trade, it came from this OB. So now I know that it has to come, break my high, go. So that's the OB that I'm gonna take. I can have an OB that can even be here, right? Just below the high. I'm not gonna take it. What did it do? Nothing. Remember, we learned about premium and discount levels as well. Want to buy from the premium, we want to buy from the discount, going to the premium if you are in an uptrend, and the opposite is true for a downtrend. So let's do this. Let's come to the charts. Is there anyone with a question right now? Are we understanding?
Yeah, I have a question.
I understand.
Okay, there's someone with a question. Kindly go ahead and ask.
Yeah, yes, like opportunity to my order blocks is at below is 0.618%, right?
Yes.
So panere kutanga tanga iro then nerechitora mati ndora muno consider iro rimwe racho iroro price haizodzokeri koko.
All right. Now, this is what happens. Sometimes price can even choose to come back to that second OB, utilize it, and then go. It's very, very normal and it's very, very possible. It's very, very possible.
Okay.
But what you're saying is if an order block is responsible for the break of structure, most probably that's the one that matters to us the most than the one which did nothing.
Okay, okay, I see.
Questions?
Understood.
Questions, guys, questions. Let's ask questions. So what I want you to see again is this. Um, we have a gap here, right? Can you see that we have a gap here? Can we all agree that this is a gap?
Yeah, yes, this is the
This is a fair value gap. But what did price do? Um, Let me reference, say, from the M15. I think that's where our example is gonna be a bit more clearer. Okay, so we can move again to M30. Right, I think this was our gap, right? I think we can all see it. It's small as it is, can we see?
yes.
This means already this whole part of our gap was filled in M30. But what you'd see is, say, now let's go to M5. I want you to see oh sorry, I want you to see something. Will I be able to come back to that area? Right. Since you know that this whole cape was covered in our M30.
Was covered in our M30.
Come on. Right. What we would say is,
What you see
let me come back and do this again. Sometimes price wouldn't need to come again and then fall. Why? Because in our larger time frames, we've already filled, right? But what you'd see is now we have a change of character, right? We can't say this is a full. Sorry for that. We have a breakout structure. Yeah. After that breakout structure, price comes to another OB in that smaller time frames, and then it goes down. Now you start asking yourself, okay, what about the order block that's at the top there? Why didn't price utilize it straight away? We've already filled a gap in M30. So if we check on that OB, let's say let's go back to M30. Let's come back to M30. What you'd see is besides the gap that we had, there is just healthy price action over here, all over this area. Besides this gap and this huge one that was also filled, we have healthy price action. So in our smaller time frame, price wouldn't really need to say it needs to come back up and fill orders which we already filled in the larger time frame. And remember, our larger time frame commands the market more than the smaller time frames. I'm hoping we are getting it there. I just wanted to emphasize on that point ukuthi sometimes you might think with price inofana todzoka whether you like it or not kumsoro. No, it doesn't do that. As long as price was balanced, we have the price action, price continues in its own right direction, filling orders, following liquidity, filling orders, and basically just moving in the direction it's supposed to be going for that time. Tapanzwisisa.
Yes.
What about others? Are we understanding?
Yes, sir.
Okay, again, what we can see here is we have want to show you something. Um, these are more of like major highs and major lows. If we move them to larger time frames, but I want you to take a look at this. If we touch this high, right, we're in a downtrend. If we touch this high, sorry, if we touch this high and this low, sorry, I don't know what happened. If you touch this high and this low, right? Um, let me do this so that we see clearly Teshika one. Come on, where are you? Where did I put that point? Uh-oh. Now I can't see it. Ash. Oh. Ish. Where is it? Actually wanted to make a very good example out of it. But anyways, what we can do is, I think it's here. Let me remove this. I think it's here. Yeah, it's here. What we can do is we can touch our high and our low, right? And we do have an order block here. Can we all see it? We do have an OB here. But what did it do to the market that we can really say it really played a part on? When the market came, it didn't utilize that area. But what it did is it came to an order block that's valid in the 0.618% zone, tapped on it, and then it fell. Just as much as the market did when it came to this area again. Guys, are we understanding? I'm very concerned if you're understanding.
Yes, I'm understanding. Just
Right. So for this particular one, let's shift to M15 and I'll show you something that you can see clearly. Ooh, right, so let me remove this one. It might confuse you. So now what you see is we have our high and our low. What did price do? Why did it choose not to react at this OB over here, which was our last sell, or which was our last buy before we started selling? It didn't do anything and it was below the 0.618%. Can we all see that?
Yeah.
yes.
Okay, is it confusing you now?
No, it's not.
All right. So regardless of that, we had to look for any other OB that lied within the 0.618% and price came, wigged on it, and then fell. Pakati pesa apa panapa. And we can't use this one that's below the 0.61%. It did nothing. But when price came to break this structure over here, came straight from that high, broke structure, gave us these small ones, which lie below the 0.618%. And even when price came, didn't do anything, just gave a small reaction, then utilized the one that was actually responsible for this whole move.
Mhm. So Fibonacci is very important.
A fib is very important. It won't ever let you down. So let's continue this in our
Oh,
private group. I think we have less than a minute remaining. We will continue this in our private group. And yeah, I think this mentorship is turning out well. Ndikona results amukupa, they are quite impressive. So
yeah. So
yeah, so since we've got like a minute remaining, let's just continue this in our group, and I'll also post this video channel kwedu, on Telegram.